Welcome to the After 5 p.m. podcast, where we clock out of mortgages at 5 p.m. and clock into family, life, and finances. Thanks for tuning in. This is your hosts today, Shaun, Russon, and
Benjamin Daniel Mcaffee.
Tell us about your middle name, Daniel.
I thought we already addressed this.
Oh, yeah. Go back a podcast or two and you can hear the story. Did you know my middle name is Paul?
I didn't know that. Where does Paul come from?
My grandpa.
Yeah. So does Daniel.
Wayne Paul Russon.
Daniel's my grandfather.
Boyd, where did Boyd come from? Your dad?
Boyd's my dad.
Okay.
And my
His first
grandfather
name.
on the other side.
Okay.
So,
Cool.
yep. So my brother, who's Boyd the third, he goes by Mac in the family because everyone got so tired of
Boyd.
someone would call, hey, I need to talk to Boyd. Which one?
Mm-hmm.
And then it would be
The third.
senior or junior. Well, people didn't know that my brother was a third, so they transferred the phone call to my dad, which was really meant for my brother because they assumed that he was, junior. Anyway,
Interesting.
actually the third. Now that we know enough about my
Middle name?
middle names. So today's podcast, we're going to cover, I just thought it was kind of interesting to say, what are some of the frequent questions that people have about mortgages? So we kind of scoured the internet, found a whole bunch of questions I felt like are totally relatable to helping inform and empower a first-time home buyer as they move forward in the process. So I'm just going to start pinging you with questions, Shaun.
Yeah. I think just kind of going back and forth on a few hot topics, and even you mentioned first-time home buyers, but even when we were kind of building this list, there was some good stuff that I get from repeat buyers too. Mm-hmm. Things that come up, just really good questions. This may turn into a part 2, just depending on how this goes. So if we do, we joked about this might be home buying 101, it might be home buying 102. So if it does end up into 2 podcasts, should be worth the while. So,
And I just want to say, if there's anything we cover in the podcast today that you think is intriguing or beneficial to others, I just want to ask you to forward it to 2 or 3 people that you know that might benefit from it. We'd love to help promote this podcast and increase our listeners. So if you see value in it, please like and share. So first question, Shaun, how can I tell if it's time to stop renting and buy a home?
Great question, Ben. The answer may surprise you. So coming from a mortgage lender, it may not always be a good time to buy a home. So I'll say it. A lot of lenders are always pushing buy. I personally don't agree with that, and I think it is individual based on your financial situation, your career, where you're at. And so typically though, I always like to know where people's rent is. If do they have a housing expense, right? Mm-hmm. What is the housing expense? Is it fair market rent? Is it below market rent? I always like to know that. Are they in a 400 square foot townhome or condo or manufactured home? Are they in a really small place and they need more space? Do they have a bunch of kids? I always like to kind of dig a little deep on where they're at. And then from there, what is their budget? Do they have a down payment? Can they afford a mortgage? Does it make sense financially for them to be, to take on a mortgage? So really diving deep into their situation and seeing what their needs are, where they're at, to see if it makes sense to buy. Because the situation I run into a lot is just because I'm a little bit younger, I've got someone that's in school or they just graduated. They're living in a casita for $400 a month or for free with a family member. They don't have any money for a down payment. They're just starting and they're going to get a raise in a year or 2 and their income's going to increase. That person may not be a good person to go buy a house right now, right? If you can have your housing expense covered or you're below market rents and you can put money in a savings account or a CD and build up to put a down payment, or you might be moving or relocated with your job, that might not be good to commit to a 30-year loan.
I agree, and I love how you're answering the question in a little bit different way than what most lenders probably would respond. But I would say, if we're looking at it statistically, it is still probably top heavy. Usually smarter to buy than to rent. But I do agree that every situation, it's not a one size fits all. I do actually like that statement.
Yeah. Yeah. And we could get into the details of, appreciation and investing in money, and, time in the market is better than timing the market. But, in some cases, it doesn't make sense to buy. Yeah. But I think long term, history shows us that, historically, owning real estate is a pretty smart investment, especially if you're buying in areas that are appreciating. You're getting into a good loan product. You're in a good neighborhood. I think, if you really looked at the statistics, it could be good.
I guess I just have the scripting in my ear, hearing it from a gentleman. Oh, the best time to plant a tree was 30 years ago. The best time to buy a house was 30 years ago. Sure. And I think for the most time that is accurate. But I think there's people who live in certain areas, certain cities where the cost just doesn't make sense. Mm-hmm. You can tell when someone's forcing it and pushing it prematurely, and all they're doing is setting themselves up for financial failure.
Yeah.
So I love that response. I love that answer.
Do you want to chime in on that a little bit?
I feel like I did, right? People will do rent versus own analysis, and of course, if you can find it where it's cheaper to own than rent, then it's a no-brainer.
Yeah.
But even if you do the analysis, most of the time owning is going to be a little bit more expensive than renting. Not only in the payment, but now you have upkeep and maintenance that you wouldn't normally have to carry. But there's also some tax advantages that come at the end of the year that you wouldn't normally. So I still think there's payment shock. People are going to pay more for a house than they will with rent. But to me, it's pretty easy to work those numbers backwards and show how the financial benefit that ball starts to snowball mm-hmm. and get better and better year over year after you own.
Yeah. So. Yeah, and one thing too, just being a renter that sometimes people forget is the landlord can kick you out in almost any time, depending on your state and the rules with being a renter. But they can also increase your rent too. So that's the beautiful thing about a mortgage is if you do a 30-year fixed, that cost for 30 years, albeit escrow and taxes, insurance, whatever, is going to stay the same. And so if you think rents are going to increase over 30 years, investing in your own home and guaranteeing that payment won't change can be super smart.
I was actually looking at a graph with a client. I actually kind of a little bit of a reversed conversation. I was kind of questioning him because so many people, as interest rates have been climbing the last couple of years, have gotten to the point where like, hey, we just can't. If I was to buy this exact same house, my payment would be $800,000-$900,000 more. We just can't. This kid moved forward, and I just want to be like, why? Why are you going against the current when so many others in that exact same scenario wouldn't? And we actually kind of plotted it out on a graph. And you say, okay, well, if average rents are increasing 2 to 5% per year, it's different throughout the entire country. I think national average would be about 2. Utah, I mean, for a number of years there was 8 to 10% per year. But if you were to plot it out on a graph, yes, the first 3 years, his mortgage is going to be more than the rent. But then from every month thereafter, the graph is in his favor. He's like, I just want to get my 3 years started sooner. Yeah. And I thought that was kind of neat to actually put that on paper and see it. That's not even including the lowering of interest rates or getting rid of mortgage insurance, which might make that graph and time frame tighter.
Yeah. Yeah, great point. We could spend a lot more time on that too. I'll just share a quick story that popped up. We had a gentleman that bought his house. He paid about $800, I think was his mortgage that he took out on it. A couple years went by. He reached out, hey, I'm buying another investment property. We're just trying to figure out ways to strategize on bringing his payment down. And hey, that payment's fixed for 30 years, right? Well, he had been super aggressive in paying his loan down. He owed like $400,000 on his house.
Oh, he's chunking at it.
So he was going crazy at it. He's a doctor, good money, good income earner. We looked at doing a loan recast.
What is that?
So a loan recast, he keeps the same interest rate, stays where he's at in his amortization of his loan. So if he's 10 years in, you keep that. But what you do is you re-amortize the loan at the new lower balance. So a lot of times you have to do an additional principal payment. Usually it's 10 or 15,000. Some servicers don't allow it, but depending on the servicer, they'll adjust that payment lower on that new lower balance, and now your interest payment goes down and your principal payment goes down. You keep the same rate. It's a much lower cost than a refinance, but his payment went from about $6,000 a month to almost $2,800. And so in that case, now his plan was, well, now I'm just going to still make the same payment, but accelerate the loan payoff, and now I'm paying $3,000 more in principal every month. And he was like stoked. And then
the insurance policy, if crap hits the fan, he can default to the $2,800 payment, built-in insurance policy.
Yeah. So anyways, just a story that came up of, hey, that payment is fixed, but there are some pretty cool like hacks to lower that. So good on that one?
Yeah.
Okay. Question 2, how long does the home buying process usually take?
Good question.
It depends.
It varies. And I think it's very typical. You can kind of mirror what real estate agents are doing on their offers, on what is happening in the market and how long financing is taking to secure. So I refer to it as a conveyor belt. I'm not talking about the pre-approval of someone calling saying I'm interested, the consultation, the analysis of the income and all of that. We're talking once a contract, a fully executed contract, both buyer and seller has signed, from that day moving forward, how long should it take? Most contracts that are coming across my desk are a 30-day escrow right now. Are you seeing the same?
Yeah, Utah, I think in general is about 30 days.
Yeah. So right now, we're actually closing stuff closer to 3 weeks. That's without rushing and stressing anything, but that is directly correlated to how few mortgage transactions are flowing through the industry. So if I was to go back to 2020 and 2021, it was taking up to 2+ weeks to get an appraisal. Mm-hmm. Now we're getting them in 3 to 4 days.
Yeah.
So just everything. It's not just the mortgage side. It's the title companies. It's the appraisers, the home inspectors. Everybody's been able to turn things quicker, which just speeds up the conveyor belt. Yeah. Now, when there's a ton of flow, right? So let's go back to 2020, 2021. Everyone who was touching it was taking longer. And so it may have taken closer to 45 days. And some refinances, because if we have purchase transactions and refinances going on at the same time, a purchase contract has deadlines and earnest money at stake. A refi doesn't. Refi is a matter of managing expectations and making sure you're locking the loan for a long enough duration to support it. So there was times that if there was kind of a clogged up system, purchases will always take priority. So anyway, long story short, 30 days is pretty typical right now, even though we do it a little bit quicker. And then give the buyer and seller an option to close early if they want, or stick to the contract deadlines. But the longest I've seen a purchase take is 45 days in my career.
Yeah. The one thing too, just on that, if you are a home buyer and say you're selling a home and maybe you have to close on your sale, like say you're using that equity to purchase a new one, using that for the down payment, and you're under a time crunch, it can go faster to, like you're saying, 3 weeks. But just communicating that to your lender of, hey, yeah, I've got to close on this one to buy this one, and making sure you're setting, proper expectations to make it happen.
What's the fastest you've ever closed a loan?
I think it was 8 or 9 days.
Yeah, like you're right on the legal limit then.
Pretty
you're
much.
Right on the cusp of the legal limit.
And in that case, I mean, those are like,
So listeners, when I say legal limit, the mortgage industry with the regulation that's in place, from when disclosures are sent, there's usually certain time frames that have to lapse before you can send the next one. So that's what I'm referring to, is close it as fast if you were to stack those deadlines as tight together as possible to legally close it.
Yeah, because legally it's 7 business days, right?
Is it 9 or 10? Oh,
it's even longer. Yeah, because the LE has to go out and there's a 3-day waiting on the CD. Yeah. So if the lender's saying they can close it in a day, legally
beware.
You can't. Yeah. Or it might not even be a traditional loan, so you might just want to double take it.
Spot. I think that's great. And the ebb and flow. Real estate agents that are doing a fair amount of business will kind of know what those timelines are. It is very common for my referral partners to call me, say, hey, I'm getting ready to put this offer together. What's the quickest we can do it without putting stress on the system? I love that respect from those individuals that I work with that care, right? Like, hey, we want to do it efficiently, but we also don't want you to take stress home over it. So
on this question too, it brought up another, sometimes that comes up when a buyer asks me this, especially if they're possibly renting or when they are renting, is when do I tell my landlord that I'm moving or that I'm, getting out? What would you say to that person? That's a tough one, huh?
Well, it's tough because we don't know who the landlord is and how they respond to that information. If you're dealing with an owner operator landlord, there's no property management company involved. Sometimes the earlier the communication, the better. The more they'll work with you. Then you have property management companies that the moment you give them a notice, they're immediately looking for another tenant. So they might have another lease signed, and now you have to get out. It doesn't matter if your situation has changed and the property fell through and you still got to get out because now they have a new contract with somebody else. So my usual follow-up questions to that is, tell me about your landlord. Yeah. Who are they? Have they been pretty open and lenient, or have they been kind of stiff and hard to work with? And I'd say the hard to work with ones, wait until you're far enough into the mortgage process where you pass the due diligence, you pass the finance and appraisal deadline to where things are looking pretty solid. Even if you're paying for a couple extra weeks of rent, it's better than being kicked out of the house.
Yeah. Yeah, and the one cool thing about closing on a mortgage is the month you close, so say you close on like the 15th day of the month, you don't make a payment that month, and then you can set it up so you actually don't make a payment the following full month. So sometimes you can almost have 60 days worth of a wiggle room. And so, some renters they'll wait until it's all the way done to tell their landlord, and they know they're not going to have a payment on the mortgage, so they don't have to double pay. So they, but then guarantee that they have a place to go if something comes up.
And from my standpoint, being someone who has rentals, I kind of like the early communication because I know that you're looking. I know that we need to find another tenant, but it also keeps my options a little bit more open. So everybody's different.
Yeah.
Everybody's different. Yeah. What is the first step to home buying?
It depends. No, I'm just kidding. So what I've found is for like a general buyer, if they haven't bought real estate before, they're usually going online and looking at home, like, hey, I want to buy a house. I'm going to go online. They'll end up at the big, the Zillow or Realtor.com or something. And then they find a house they like, and then they're calling, and then it's an agent. And then from there, the agent saying, hey, we need you to get pre-approved. So that's kind of how I typically see or get in contact with a buyer is like, oh, the realtor said to call you because I want to see what I can qualify for. So if you are a first-time home buyer or just thinking about buying a house, I would recommend the first step of setting up a pre-approval appointment. Find a lender that's going to do a deep dive of your financial situation and put a plan in place to buy a home versus, going online and get pre-approved in 3 minutes. Sometimes that's not the best place to start, and you're not going to get very good advice or a plan. You're just going to get a piece of paper, and it's probably even not a good pre-approval. So find an expert locally, that is what I would recommend, that's going to sit down with you, go through your whole situation, and give you a really good roadmap to buying a home. That way you can see what your buying power is, go over different loan options, see if you can even get pre-approved or see if you need to work on something. And then from there, they'll get you in contact with a realtor if you haven't already, and then you go home shopping.
Oh, I love that you talk about a map because things are constantly evolving. I just had a conversation this week with a guy who said, hey, my lease ends in 2 months, but I won't hit my time frame with my military service to be able to take advantage of the VA loan and have eligibility there for 3 months. And oh, by the way, on that same month, I'm getting a fairly large bonus. So you're like, oh man, we've got the lease where we got to manage that, but we also have that bonus money that could help pay off a few things on the credit report, which would change the pre-approval by anywhere from $100,000 to $200,000 in buying power. But what do we do? So the roadmap, I think, is great because you can talk through all the different if then whats and move the puzzle pieces around to make sure you're customizing it, right?
Yeah.
So.
Yeah, and the other thing that comes up too, if we get in contact with somebody, is I want to buy a house in 6 or 12 months, but I don't want to hurt my credit, or whatever. I don't want to pull my credit. It might be too early. I still recommend those people at least see where they're at, because you can do a soft credit pull that won't affect their credit. You can run just rough numbers based on income. Of course you want to do a deeper dive so it's as accurate as possible, but at least, back to your point of the roadmap, at least they know where they're at and they can connect the dots from A to Z of, hey, we might need to work on credit. We might need to pay something off. We might need to get a gift from family, but knowing where you're at and knowing how to get to where you want to go is invaluable, especially when making such a big investment in a house.
Yeah. The little things that I think are super easy from you and I because we do it every day, but the average consumer might not think about it. Some of the things when it comes down to paying off debt, we're looking at what loan has the highest payment, not the highest balance. So I'm always surprised at when I share things with people like, oh, I wouldn't have started there, right? And so it's just good to get that detailed consultation. I think that's great advice.
Yeah. And the other kind of just pitfall is if you wait too long and you're looking, the perfect house might come up. You don't have the pre-approval ready to go. You don't have your finances in order, and you fall in love with it and you can't get it, or you need to work on something and now you missed out on that opportunity. So being ready, if you are looking to buy and to make a move, not only makes your offer stronger, you can move on it faster, but also make sure you can afford it and you don't miss out on something you really liked.
What is the most frequent thing that comes up? I have something in my mind, but I'm curious what yours is. For someone who waited too long to do that consultation, that ends up being some kind of hurdle.
I would think a credit issue, because if I'm understanding your question correctly.
Which is correct, and mine, I'll take that further. It's medical collections.
Oh, interesting.
It's one of those, man, if you would have given us 60 days, we could have taken care of that. But you waited too long, and we have no more runway. And usually the collection doesn't impact us being able to do it, but it changes the rate quite a bit because that new collection just dropped the score. That lower score, I can't offer the same, interest rate.
Yeah.
So those are the ones I like audibly can hear my palm hitting my forehead, right? Like, this could have been so easily avoided.
Well, the one I see too, or that I have buyers hesitation on a lot is credit card debt. There might be some embarrassment or some guilt associated with us seeing how much credit card debt that they have. But back to your point, we don't really care. And honestly, it's just all numbers. Like I'm not looking at that and like judging them by any means, but we don't look at the balance. We look at the payment. And so the other thing too is with credit is if you're waiting a month to pay off a couple thousand in credit cards, it might take 30 or 60 days for the credit bureaus to even get the updated data. So by waiting, you're still possibly 30 or 60 days out. And in the mortgage industry, we have tools to say, hey, if you pay that off, we could even help boost your score.
Yeah.
So if it is in the picture of and your plan of doing that, we could even strategize with you and get you a better deal and not have to wait for the bureaus to report and maybe just have it hold you back.
What is it? The Scout motto? Be prepared.
Be prepared.
Is it the motto? I can't remember. It's been a few years since I've been in the scouting programs, but those who are proactive and don't delay in doing the consultation piece always end up being better, right?
Yeah.
I tell people quite frequently, so we sit down, we take 30 minutes together to do a consultation, and then you don't end up buying a house. No harm, no foul, no skin off your back, no big deal. But if something comes up and we did that consultation, it arms you with the information you need to not miss out on a property. And so often we hear people on the other side that were too casual, it didn't make it a priority, and regret it later.
Yeah. Yeah, well, that's a perfect segue into our next question too is, if someone's waiting on the credit cards or they want their credit score to be perfect, do I need a good credit score to buy?
You don't need it, but I highly recommend it. There are loan programs. There's two fallacies out there that I'm always shocked at when I hear people say, "Oh, I thought I needed a 20% down payment. Oh, I thought I needed to have a 720 credit score." I don't know where that information is that people default to that, because I do more loans for people that don't have 20% down. And it's about 50-50 on who have 720 or above or 720 and below. So I find that most loan programs out there start getting very limited under 620. If you have a 620 credit score or above, think of it like a hallway with a bunch of doors. The higher your credit score, the more doors that are open. As your credit scores get lower and lower, there's still options. You just might be limited to one or two doors. And those lower credit scores will also translate to more expensive mortgage insurance and more expensive interest rate. So the earlier you can work on building those scores, consulting about them, working on them, it improves your terms, not necessarily whether you can or can't get a loan.
Yeah. And correct me if I'm wrong, but you can actually not have a credit score and still buy.
If you have a program, I don't think I do. Teach me.
So FHA, you can do a manual underwrite.
Oh, you're going manual. Okay. I see where you're going with
yeah,
this.
that you don't. So if you've been, so it's called non-traditional credit. So if, and this is a very small percentage of home buyers, but if you don't have a credit score, there actually are ways to do it. If you've got a recent bankruptcy and foreclose, if it's like gnarly collections, derogatories, that's not going to be an option. But if you just don't have a credit score, but you've paid rent on time, you paid utilities, you can find non-traditional ways to qualify without a credit score.
Yeah.
So just to chime in on that.
That's good. And I'm going to actually give a little bit of insight to what you referenced there. The industry has gone more and more electronic, right? More automated. So it doesn't matter whether you're getting a typical conventional loan, whether you're getting USDA, VA, FHA, all of them have a software system that you input credit, income, assets, run it through their software, and they'll kick it back saying, "Hey, we're comfortable with the risk factor. Proceed with this documentation to move forward." Automated underwriting systems is what they refer to them as, or AUS. What you're talking about with a manual is going old school. Take away all of the automated side of it, and it's just going back through an old school written handbook of guidelines, which definitely opens up the door to things that you couldn't do on the automated side. But very few transactions in the industry go manual. So nice reference, man. I haven't done a manual in years.
Yeah, that's definitely, like I said, a really kind of small percentage of buyers, but
it can be done.
Yeah.
So, no, I think those are great questions. I think this podcast will be to be continued with some more questions on another episode as we've run out of time today. But thanks for tuning in and going through some of these basic frequently asked questions in the mortgage industry.
Yeah, and just to end the podcast, if you are looking to buy, or you have it on your roadmap, it's a goal to become a homeowner, reach out to Ben or I. You can follow us here on the After 5 p.m. podcast, or you can reach out to us on the social channels. Happy to help. And then if you're a real estate agent too, we can help all throughout Utah. It's not just St. George, and we're licensed in multiple states as well. We'd love to connect with you, help your home buyers, help walk them through this process and be an expert there for you, and make you look good too, for you and your clients. So definitely reach out. We're here for you. Don't be shy.
We're out.